Good day, all. Ira Epstein of Linn Associates with your market wrap-up for your SPDR ETFs and some stocks on this Tuesday, October 12th, 2021. I hate to say it, the Chicago White Sox lost, but I praise the Houston team. Those Astros, they're great. So what can you say? Very, very good job. I'll tell you what's not fun right now. The markets are fighting inflation. They look at the oil prices, they look at other goods, labor costs, and the market now is getting nervous. There are more and more articles popping up in Bloomberg, Reuters about stock portfolios and well, I shouldn't call them stock, your investment portfolio, and that the old 60-40 rule can get you a 10% loss in these markets very fast. In other words, primarily stocks. Now, I'm not sure I buy into all this just yet, but I'm certainly aware of it, and it is the battle that is going on, and you've got to pay attention to it. You know, each day these markets are fighting all day long for direction, but it seems to be that higher interest rates are holding. The market's not giving up on those, and that weighs on the market, and at the same time, oil prices don't break much, and that's the inflation. That's your canary in the, I guess, in the mine right now. Let's take a look at Microsoft because it's pulling back, and as I thought, once it filled this gap, I was hoping it would make a run to fill it over here. I'm not unhappy, and that was it. Now the market has to fight another battle. What's the trend? There is none. You have a higher high and lower low scenario. Where's the battleground? Do you see the red line, the line in the sand, as I like to call it? That's what you're fighting at. Doesn't do you too much with the Bollinger Bands. Yes, there's support and resistance, but that's not what the battle at this time is. It's all about the center territory and which way the market ultimately wants to go from there. In terms of momentum, you had been going up and now you flattened out. So no trend, bias up because you're over the 18-day moving average of closes, but momentum is no longer pointing up either. We then move over to Apple. And as you look at Apple right now, you can see that you have a higher high, lower low. I'm going to repeat, no trend. Is the market going to make a run for the lower Bollinger Band? That could be the story here. Even if you popped higher, you don't start an uptrend. And if you just break down, you don't have a downtrend. This chart's a mess. You're fighting again at the 100-day average. And as I said, the lower Bollinger Band is your next level of support here. ARK's acting better. You've got the higher low, higher high scenario. It's not a bull trend because while the swing line is up, the bias is down and you're still working off an oversold condition. It is certainly, in my vernacular, a market where the shorts covered in the market, but I don't think anything new has begun one way or the other. In XLI, the industrial sector fell back to the 18-day average of closes. And again, what will inflation do to these markets? It's not going to help them. And the market is realizing that and fighting a battle about it. In the semiconductors, slipping back, I just now read that because of semiconductors, Apple is cutting back the new phone production amounts. We'll know more about it probably in the morning. This was a flash that just came out, and that is not a surprise to me. You know, if a car takes 1,400 semiconductors, I imagine a phone takes a good amount of them as well. And why doesn't somebody open more semiconductor factories? I'm trying to figure that one out. If the technology's there, and I know that each machine, I was reading a story, costs about $5 million a piece, but if the shortage is real and it's going to last, I would think they could throttle in more production. Maybe, I don't know. When I take a look at the Seymour Cannabis ETF, you know, I like to roll the different ones on different, in my morning subscriber videos, I use a different one than this. My paid subscribers, it's all different. But you've got lower highs, lower lows, still bearish. Are we going to embed? So if we step over right here, both numbers were not under 20. They were under 20 on Monday and today. You need another day to know if you're going to convert from oversold to embedding, locking in another leg to a downside. In the home builders, we're sort of holding in here, but not trending. Again, you ended the downtrend in this market when you got over the high right through here and you lost the embedded reading. That is not the beginning of an uptrend. It's the end of a downtrend. That's very different on the two, and that's where these markets are fighting a battle now. So on the upside, the 18 to 100-day average. On the downside, the 200-day average to the lower Bollinger Band. In between, why be involved? In the energy sector, you're still embedded. The market's now had 2 days where it's tried to break down. Doesn't mean it can't break down. Okay, just pay attention to the red line. If you close under 79, you don't want to be long any longer. Until that occurs, on these breaks, and this isn't much of a break, but given a further one, I think the pros will reach in to buy it as long as that red line, which is at 88.26, stays over 79. In the emerging markets, you had that one pop that ended this whole downtrend, and we went over this, but I like to keep doing it. Lower highs, all of a sudden, you've been oversold, you never embedded, you pop through that high. End of the game. Market starts a run, and now it's just sort of stalling out. Really nothing new there. In gold is such a disappointing market, but one of these days it's gonna click. And you've got to look for zones where if you're going to buy it, keep your risk this small. And that could be developing right now. You have, if you look at the chart, a lower low and a higher high, and you closed over the 18-day average. That's not a buy signal. The futures throw out a buy signal, but I'm going to repeat. It's been totally disappointing. You want to get small risks if you come in, but I wouldn't want to be short now. In gold miners, this is where you come out. You hit the upper Bollinger Band. So long, overbought, made a nice run back, and that's another reason that I'm wondering if gold isn't getting into that buy mode. In TLT, I don't expect this rally to have much leg to it. You're coming up. If you don't lose the embedded reading, I think the pros will be looking at this market and selling from right now up here, looking for that to fall back. We'll see if it's right or wrong. Again, any close over 21, out, gone, goodbye. Last, in the euro currency, I've been telling traders to continue to sell this market on my morning videos, and the reason I've been saying that to them, I'm just telling them what the general trend is. Until that red line turns over 21, I think the market's got legs, and the dollar's re-embedding. That was the reason I've been telling them that. Now, I'm not telling you the entry spot. I'm not telling you the objective. I am not telling you where to get in, or any part of that, okay? I'm telling you that I have been telling them to play the short side, and I'm going to leave it at that. Now, when I take a look at these markets here on the SPDR ETF videos for you, each morning, let's call it 9 o'clock in the morning. If there's no major reports, I'm recording right around 9, and I'm going to give you ideas on 40-some-odd ETF spiders in the different stock markets based on chart action. So you'll see the charts, you'll see the action, more studies than here. It's where I'm let loose, if you will. Buy here, sell there, do this, do that. If you like what I do here, you're probably going to love that even more. I cover not only all this, but I'm always rotating, but it's a real lot that we cover. Like you don't even see Microsoft up here. You know that I've added that. I'll take uranium in and out from time to time. It'll be different ones, but always a lot of them, and I'll just go with the flow as to where the markets are. That's what I think you want to get covered. Not expensive, folks. $8.95 for a grand total of 24 videos a month, each approximately 20 minutes long. On the bottom of each video, there's a slide bar. You slide into the section that you want, as you just saw, on the different areas that I'm covering. Give it a try. Go to www.IraEpstein.com. You'll see on the very top research. Why the very top? Because we have a whole new look to our website. You'll see it there, and you can watch these videos a lot easier there than searching in other places. Go to www.IraEpstein.com. Take a look at the landing page. I think you'll like it. Take care.